Greetings everyone from a sunny Sunday here in Singapore. I'm gonna have to catch the Formula 1 night race in a few hours, so I'm gonna have to make this short and sweet. So a few weeks ago, somebody emailed me asking if I could make a Forex major trading strategy with the following conditions. It trades on a 1 hour time frame or higher, and it rides the longer term trend but enters on a pullback. So I thought, yeah, this sounds right up my alley, so let me give it a shot, and here is how I did it. StrategyQuant's genetic builder is really great at running through millions of indicator combinations, some of which may seem really random. So if you want to preserve a certain trading idea, I recommend using a custom template which you can then input into the builder. Let me do up this template now. For this case, we need a way to detect the longer term trend. I'll start with something really simple, like the 50 period SMA needs to be rising for at least 10 consecutive bars. Now on to the trading actions, where I will enter on a stop order. $151 here means StrategyQuant will randomly generate a value between 1 and 5 in steps of 1. Usually at the template level, I keep every exit method available. Later on, when configuring the build, I can select the methods I want. For the short side, all conditions are flipped symmetrically. Now, input the template to your builder, and for the market, I will select the dollar-yen, which is probably my favorite forex major for trend following. It's like the pound-yen's little brother, offering many trend following opportunities, but with milder whipsaws. 10 years will be backtested, with the last 5 used for out-of-sample testing. Since this strategy will be on the 1 hour time frame, I've decided against using a weekend exit, so trades will have more time to develop. Under building blocks, I will choose stop entries along with a stop loss, a trailing stop, and a bar-based time stop. And lastly, under filters, I want both in and out of sample portions to have a minimum 1.3 profit factor with a minimum sample size of 350. Personally, my preferred minimum number of trades for any backtest is about 250, but if you are trading on a daily time frame, you may have to make some sacrifices. I then ran the builder and generated many strategies. If you are concerned about preserving your trading idea, you may need to check the source code to make sure that the strategy still makes sense. Here is one strategy that indeed did make sense. In addition to the SMA I programmed in just now, it uses the OSMA to detect short-term bullish momentum. The OSMA is an oscillator of a moving average and plots the difference between an oscillator and its moving average. It's available in MT4 under the Custom section. The oscillator for this strategy is the difference between the 3 and 10 period EMAs. You apply a 58 period SMA to get its moving average, and the difference between these two values is the OSMA. If this sounds familiar, it's because the MACD histogram does this as well. In fact, if you pull up the MACD and you input the same parameters, you get the same values. So for longs, you want the OSMA to cross above 0, meaning the oscillator is crossing above its slower 58 period SMA, indicating bullish momentum. A buy stop is placed at the previous day's high, valid for 5 bars. Surprisingly, the builder ended up with a tight 20 pip stop loss with an equally tight 11 hour time stop, so we aren't exactly riding the trend here. This is more like scalping but on the hourly time frame, as shown in this example. It's quite a clear-cut entry here with the 50 period SMA rising for a long time, and the OSMA is turning positive. The previous daily high is here at 130.981, which is our entry price, and we closed the trade after 11 bars. Shorts are symmetrical as usual, with the SMA pointing down and the OSMA becoming negative, and a sell stop is placed at yesterday's low. I guess you could call this a daily breakout strategy. I was actually afraid the tight stop would choke off too many trades prematurely, but a 43.5% win rate is typical for such strategies, and a payoff ratio of 2 makes up for it. The strategy is only in the market for an average of 7 hours per trade, so this should lower its correlations with other strategies. Otherwise, there is nothing much to complain about the other metrics. We have a profit factor of 1.6 and a return over maximum drawdown of about 7 for both the in and the out of sample portions. The equity curve is quite pleasant. The stagnation in the middle isn't that great, but it's totally normal for responsible trading, where you close your losing trades quickly. Resist the urge to over-optimize or add more conditions to the strategy. The best way to get rid of such stagnations is to trade more strategies in a diversified portfolio, which I think is the closest to a holy grail in trading. The MT4 backtest performance is very similar. Just note that in StrategyQuant you can toggle between trade and time for the x-axis. In MT4 you can only use trades for the x-axis. That's all folks. For more forex strategies, check out the playlist here at the top right, or if you want an introduction to how StrategyQuant's genetic builder works, check the video at the bottom.